Talk about earnings, and Unilever, like we told you earlier, is all set to deliver its first quarter numbers today. Vinny's here to tell us what to expect. Vinny?
Absolutely. Hindustan Unilever is the first FMCG company to report its numbers, and we are expecting a revenue growth of around 12.3% coming in for the company. Profit growth at around 6%. While margins, yes, there will be a contraction even this time around. Margins are expected at 23.4% versus 23.9%, which is a 50 basis point contraction. Let's not forget, yes, the company had taken price hikes in the personal care segment, soap segment coming in, but that is not enough to actually cover the inflation coming in. And yes, what we talk about, palm oil prices coming out, edible oil prices coming down, and commodity prices coming down, that impact was by the end of the quarter. So as of now, in this quarter, there is a contraction that we could see coming in terms of margins as well. Now, volume growth, we're expecting a 2 to 3% volume growth this time around. Last year, there was a very high base of 9% volume growth. So this time around, the volume growth is expected at 2 to 3%. Segment like home care also could see a good benefit coming in, because we've seen the momentum increasing in terms of out-of-home consumption, and improvement overall in the out-of-home and reopening trade is working out well for the home care segment. So we could see a good growth coming out this time over there as well. Personal care segment, double-digit growth we could see in terms of the soaps and personal care, in terms of revenue, mainly led by a pricing-led growth because the price hike that the company has taken. Now, in terms of factors to watch out for, we are going to be keeping an eye out on the outlook coming in from the management on the raw material cost. What are they seeing in terms of that? Is the worst behind in terms of inflation coming in? Discretionary and out-of-home consumption trends, as well as from HUL, we'll be watching out for the commentary coming in on rural as well as urban demand as well. So keeping an eye out on HUL today.
Abneesh Roy, good morning. Great to have you back.
Yeah,
do you expect to hear anything substantial, magical, or noteworthy from HUL on inflation and forward-looking demand?
Yeah, definitely. If you see, palm oil prices have come off significantly, almost halved. So I do expect HUL soap business to improve margins in Q2, and H2 should be a remarkably better half for HUL from a margins perspective, at least in soaps business. We have also seen crude oil prices correct from $139 to now around 105, 106. That remains slight concern, but still definitely it has come off. Of course, we need to see the rupee depreciation, which is a negative because most of the raw material is imported. So net, yes, if you see tea companies, that's a very good case study in front of us, and even coconut hair oil company Marico, they have seen good gross margin improvement in the last few quarters. My sense is soaps, biscuit, noodles companies will also see similar. So that's one important data point. Second is on rural demand. Although overall monsoon seems to have really revived, but definitely we are seeing a deficit in the high population states like UP, Bihar, Bengal, Jharkhand, etc. I think that remains a slight concern, and IMD is saying that should revive. So these two will be the important things street will be seeing. But definitely I expect ice creams to do really well, and beauty business also should see a much better quarter versus a disappointment in the previous quarter. Yes.
Stocks on an average have seen a run-up of 15 to 20% from the recent low. Commodity comes down, these stock prices, they go higher. So do you think, irrespective of what the tone of the commentary from HUL today could be, the stock is priced to perfection?
So we remain quite positive on HUL. It has one of the highest weightage in model consumer portfolio. But I agree with your point that from a near-term perspective, because stock has moved up from 1900 levels to almost 2550 level, and when the broader market has come off a lot, I think near-term there could be slight monitorable on what company says on volume growth, how they see in terms of the margins also. But yes, from a 6 months to 9 months, I think still good upside is there. I think the stock could make a new high in the next 2 to 3 quarters, given the commodity deflation is currently only being seen in palm oil. I expect that based on the global risk off and global liquidity coming off, global interest rates going up, I think other commodities could also cool off. But more important, this time the price growth, we expect 12%. This will address a lot of the concerns on pricing. So essentially, HUL takes a more longer term view on the margins and the raw material pricing. That's why they take a staggered price hike. Otherwise, pricing power is very high. So net, yes, near term, there could be a breather, and that should be seen as a good buying opportunity from a 6 to 9 months perspective.
Buying opportunity of HUL, 6 to 9 months. Abneesh, the point also is, it's something that Nikunj was also alluding to. The deflation that we have seen when it comes to commodity prices from palm oil, sunflower oil, all of that, it's not going to be seen really in the quarter for the numbers that will come out today. That will be for the next quarter. How are you folks on the street factoring that in? Because we still don't know whether we've seen some prices come down. We don't know how the companies will totally act. So in that sense, do you all have some clarity for the next quarter or two on earnings, EPS?
Yes, I do expect Q2 margins for HUL should be better than Q1. Of course, we need to see seasonality. See how FMCG companies work is they do have a 2 to 3 month of lag before current raw material starts impacting. So that's why I think Q2 should be better. H2 should see full benefit. Of course, we also need to see what's happening on rupee depreciation, which is currently a negative. And we also need to see what's happening on the crude oil prices because prices are dynamic. So these are the two small things we continue to monitor. But yes, Q2 should be better. If I see this quarter, we expect around 120 pips kind of a margin compression at the EBITDA level on YOY basis. My sense is this should definitely come off as we go further in the year. So my sense is worst is behind from a margin perspective.
Right. Abneesh, great to have you on the show and analyze what to expect from not just FMCG at large, but Unilever, of course, in particular. The numbers are due today. So is the case with HDFC Live. So let me